tell me a little bit more. How does it work? For somebody who is busy, how does it work for them?
Yeah.
What how it looks like? I mean, give me some mechanics of.
That's a great question, and we have a lot of passive investing partners that partner with us as passive investors into our acquisitions and our deals that we have. And for those individuals who are unfamiliar with how it works, there's a great thing that we are going to be releasing in about 4 to 6 weeks, which is going to be a booklet to help passive investors gain knowledge on investing in their first syndication or their first fund. And so we're releasing that here to help individuals gain the knowledge. And in that book, I can give you a little nuggets that are in the book, is that it's really educating yourself on what you're investing in. If it's going to be a multifamily syndication, if it's going to be senior living, hospitality, you name it, self-storage, educate yourself on really what is attracting you the most. And then from there, dive deeper into it. I always say interview multiple operators. The big red flag for me is if an operator does not invest alongside all their investors. That's important to me. All the investing partners that we have know that we as a company and myself personally invest alongside of them into each deal. We want to make sure our interests align, and they know that our interests align. Also, know the property, know what type of asset class, if it's a C, if it's a B, if it's an A, what does renovation or what does CapEx mean? How much are they going to renovate? What is their business strategy? So the best thing to do is first educate yourself. And they're already doing that by listening to this podcast or viewing it. They're already doing it. So you're already a step ahead for those who are listening and viewing this, is that you're gaining that knowledge. Once you gain the knowledge and you feel comfortable and you're interviewing other operators, from there, that's when you start really looking at the deal, looking at the operators, their track record, their business strategy on the deal, and then also what's going on in the market. Now, for tech professionals, I don't expect them to know everything that we do because we do this full time. And I'm not going to want to know everything that the tech professional does because he or she does that full time. That's their expertise. So there's definitely going to have to be trust involved. If you're starting out with your first syndication or your first investment into a fund, you're going to have some trust, and you're going to build that trust by interviewing those operators and really getting a good understanding of what your business strategy is. I think we've all gotten spoiled over the past 2 years where we can buy a property, put no money into it, and sell it in a year for our 5-year pro forma. And trust me, yes, take advantage of that opportunity when it arises. However, with the market shift, and as we were chatting a little before this recording, the market is shifting, and we're seeing that. And we were talking about it this morning as a company. I think investing partners should expect a longer hold period than a 3 to 5 years. I think they should start expecting a 7 to 10 year hold period. On top of that, I think, in my opinion, investing partners should look to invest into a fund to mitigate the risk of just investing into a one-off deal. Now, I think that's very important to have that understanding, is that when you invest into a fund, you're investing into 5 to 7 deals. So you're mitigating the risk overall compared to just a one-off deal. I think it's very important in the way the market is going right now. I think it's very beneficial and smart to go that route as a passive investor who's busy, with their tech job, but also have that capital saved up that they want to invest.
Very well put, Chris. Thanks for your insight in answering this question.
Oh yeah.